Holding just Bitcoin and cash is a better decision than diversifying into multiple assets. And in this video, I want to explain to you what exactly I mean by this. Let's get started. I had a client who had a portfolio that was very similar in weighting to this portfolio right here. So he had about 5% cash. This was about 3 months for him. He had 15% of his portfolio in Bitcoin, 35% in stocks, 30% in real estate. He was managing these properties actively. He had about 15% in bonds, mainly because he just wanted to have some money in some kind of fund that will give him some cash flow. A lot of people that I talk to really want cash flow for some reason, and I don't really understand why. But the point here is that this is his portfolio. He had 5%, 15%, 35%, 30, and 15%. These are my predicted returns over the next, let's say, 5, 10, 15 years. So cash will give you at least negative 3%. And this is if you put it into a money market mutual fund or if you put it into a high yield savings account, it'll give you minus 3% because the fund that you put your money into will give you, let's say, 3%. So if total inflation is 6%, you'll get negative 3% as your total return. The reason why you want cash is because you want liquidity. You want to be able to pay for things that you need to pay for. Let's say you get a roof repair on your house. You don't want to sell your stocks, your Bitcoin, your real estate, just in case any of these assets are down. So let's say you only have 5% cash and you have 15% in Bitcoin. If you run out of that 5% in cash, and then let's say Bitcoin is down 40%, you have to sell your 15% of Bitcoin at that loss. And you lose the potential benefit that you get from holding it for the long term. So in this case, let's say we have 5% cash, uh, negative 3% return, Bitcoin 15%. Let's say it gives you a 50% return. I think that's pretty reasonable over the next 10 years, 12 years, 5 years. I think that's pretty reasonable, 50% per year. Stocks will give you 15%. On average, stocks have given 10%, but we'll add another 5% just because I want to be a little bit generous here for stocks. You also consider dividends. Dividends are nowhere even close to 5%. So I think in reality, this will probably be about 12%. Next one, real estate. Let's say real estate gives you a 20% return. You've leveraged to the max. Your property does really well. You get a 20% return. You have multiple properties. This includes, let's say, your vacancies. It includes all the things that could go wrong. You get a 20% return, which is actually pretty great. And again, I think I'm being very generous here to real estate investors. I don't think it'll be anywhere close to this. Next one, bonds. Bonds will actually make you lose money if you buy them at the wrong time. For example, TLT, which is a 20-year diversified portfolio, 20-year portfolio of US government bonds, it's lost like 50% over the last few years, which is insane. Again, I'll be generous here and I'll give you a negative 1% for your bonds. So in total, your weighted, so this is the total return, including dividends and cash flow. This includes all the cash flow that people can want. They want cash flow. So, okay, I'll give it to them. So the total return would be your capital gains plus your cash flow. The weighted return is your total return times your weighting. So with cash, we have a negative 0.15% return because you multiply negative 3% by 5%. So you get negative 0.15. This is your total weighted return allocated to this 5% of cash. Bitcoin will contribute 7.5% total returns to this portfolio. If you multiply the weighting by the total return, stocks will contribute 5.25%, real estate will contribute 6%, and bonds will contribute negative 0.15%. So your total portfolio return is 18.45%. And the reason why people want stocks and real estate, I think this is one of the keys here that you have to understand. The reason why people want stocks, real estate, and bonds is because they want something to liquidate in case something goes wrong. So you might expect that if your stock portfolio is down, maybe your bond portfolio won't be down or your real estate portfolio won't be down. So if you need cash randomly, what you can do is you can sell some of your bonds or you can sell some of your stocks or some of your real estate at any point whenever you need cash. So the reason why people want to diversify is to make sure that all of their assets aren't down in case they need cash or in case they come up with some opportunity, they can sell one of their assets and they can keep the others. Another reason why people diversify is because they have no clue what they're doing. They haven't done the research into stocks. They haven't done the research into real estate. They haven't done the research into bonds. They haven't done the research into Bitcoin. All they trust is cash. And they heard from someone that they should buy multiple assets, they should diversify. So they buy all these random assets. They know nothing about every single one. They just buy everything because that's what they think they should do. That's one of the reasons why people diversify. And people won't be able to explain to you why they want cash flow. They probably won't be able to tell you why they want bonds. Bonds are usually held for, let's say, if somebody has a fixed income. If they want to supplement their income, they'll get a consistent cash flow from the interest of a certain amount. So you hold bonds when you get older. People who are young are holding bonds for whatever reason. They think bonds are supposed to be in their portfolio because that's what they read from some random book. They buy dividend stocks. People are in their 20s and they're buying dividend stocks because they think that, oh, holding these dividends will help me to reinvest into this stock and I can use this cash flow to buy more shares and I can do everything I want to. I can keep growing my portfolio. They buy real estate because that's what they heard. They want to do something to get their money. They want to do something to be able to maintain their portfolio. They want to have a part in their portfolio's growth. They basically want to allocate that return to themselves. And I think those are the reasons. But I think that you don't need any of these. You need none of these. None of these are relevant. You don't need stocks. You don't need the cash flow from stocks. The cash flow, the dividend from stocks is a forced liquidation of the company's future potential. So instead of investing it in their future, they're giving you that cash because they can't do anything better with that cash. They don't want to innovate. Real estate, again, forced liquidations. You hold on to a real estate property. If you just hold on to it, it's going to be a cost. It's going to be a liability. So you have to rent it to someone to get some cash flow to liquidate the time value of that property. Over time, the property wears and tears. So all you're doing is you're just recycling that cash back into the property. Doesn't really make any sense. Next one, bonds. People hold bonds because they think that they're stable. They think that they're going to get a cash flow so they can pay for their expenses in retirement. At some point, they'll retire and they'll be able to sell some of their bonds. They'll be able to get the cash flow from their bonds and they'll be able to use it to pay for their expenses because Social Security definitely won't take care of them. So the total return on this portfolio, even though you're doing more work by holding real estate, you're holding stocks and you're taking a way bigger risk. You have management risk, you have obsolescence risk, you have counterparty risk. You're holding your stocks with a brokerage. The brokerage could go bankrupt. The government could say this person shouldn't be able to access their stocks. So you're taking a lot of risk there. With bonds, you're taking even more risk. With bonds, you have to rely on inflation not going up too much. You have to rely on the central bank not printing too much money. So all of these assets have their risk. The issue with real estate is, what if your property burns down? What if insurance doesn't pay you out? What if your tenant destroys the property and there's nothing that you can do about it? So with all these assets, all you're doing is you're lowering your risk adjusted return. You're increasing your risk and you're decreasing your return. Cash is supposed to be risk free. Cash is liquidity. You can use it whenever you want to. Somebody will accept it if you want to pay for something. Cash represents liquidity. When you have cash in your portfolio, you don't need the dividends from your stocks. You don't need the rental income from your real estate. You don't need to buy bonds because bonds can basically be turned into cash and that's their only use. That's the point of holding bonds. So if you just held cash and Bitcoin, and instead of having all of these distractions, you just held cash and Bitcoin, you used your cash to pay for your short-term expenses and your medium-term expenses, and you used your Bitcoin to pay for your long-term expenses. Think about how much of a difference that would make. If you got rid of your stocks, real estate, and bonds, you would free up 80% of your total capital. You would get rid of these low return, high risk assets. You would get rid of your bonds, which are again low return, high risk. You would get rid of these low weighted average returns. And all you would do is contribute everything to cash and Bitcoin. So your portfolio return here is 18.45%. Now let's look at the second example. So this was, like I said, a portfolio that I had a client who held this portfolio. He had this portfolio. So I suggested to him changing his portfolio a bit. Instead of contributing 35% to stocks, 30% to real estate, and 15% to bonds and getting a lower return, I suggested to him contribute everything to cash and Bitcoin. Get rid of all of your allocations to stocks, real estate, and bonds. Contribute everything to Bitcoin and cash. If you're interested in learning more about Bitcoin, make sure you join the Mindful Money and Bitcoin community. It's only $20 a month. You can join for a month and you can leave it if you want to. We have live sessions every single week. We also have the Bitcoin Fundamentals mini course. This course has orange pilled at least 1,500 other people. People who have gone through this course have bought Bitcoin immediately. So if you're on the fence at all, take this course. Like I said, it's included in the Mindful Money and Bitcoin School community here. $20 a month, cancel whenever you want to. We go through various topics like how the current financial system is designed to steal from you, why you feel like you're getting poor even though you're working harder, and why Bitcoin is a solution to our entire broken financial system. Now, keep in mind, you don't have to do 50-50. I just showed this to him as an example. I actually suggested to him 20-80 instead of 50-50. So if you were to do 20-80, let's say you have instead, so 5% here would be 3 months of cash, 20% here would be a year of cash. Just multiply by 4. So you have a year of cash, you have 80% in Bitcoin. Your weighted return from Bitcoin is going to be 40%, and your weighted return from cash is going to be negative 0.6%. So you end up with a 40% return. You more than doubled your return compared to this first portfolio. You more than doubled your return, and you no longer have to take the risks that comes with real estate. You can put your Bitcoin in cold storage. You can put some of it in ETF. You can put some of it in multi-sig. You can put some of it in collaborative custody. However you want to do it, you can diversify with Bitcoin. You get rid of your stock related risks. You don't have counterparty risk anymore because you don't have to hold your stocks with a brokerage who holds it with a custodian. With the custodian going bankrupt, you don't lose everything. You can obviously hold some Bitcoin in ETFs and you have some of the risk that comes with stocks. You can hold IBIT, the Bitcoin ETF, and BlackRock will hold your Bitcoin with Coinbase. Of course, you have the same risk there with counterparty risk, but you don't get these low returns that come with stocks. Stocks will give you a 15% return. Bitcoin will give you a 50% return. And then we have bonds. With bonds, you have to constantly worry if your government is going to print a ton of money. Of course, with cash, you have to worry about that as well. But if your government prints a ton of money, your Bitcoin is going to pump. So you don't have to think about the cash flow that comes with stocks. You don't have to think about the cash flow that comes with real estate. You don't have to think about the cash flow that comes from bonds. You have a year's worth of cash sitting there. If Bitcoin were to crash, if you really want to use some of your cash to buy more Bitcoin, you still have that runway of, let's say, 6 months. You can spend the next 6 months doing whatever you need to, keep up with your expenses, and at some point, Bitcoin will recover. I actually had another client who had a bigger portfolio. His 20% would have been 3 years worth of expenses. So he would have been good for 3 whole years. So depending on what your needs are, you can allocate more or less to cash, but you don't need stocks, real estate, and bonds anymore. All of them are distractions. The people who own stocks, real estate, and bonds are going to move their wealth to Bitcoin. I think you're going to see a lot more portfolios that have a 20% weighting in cash and an 80% weighting in Bitcoin. Once you start seeing that, once you start seeing people put more and more money into Bitcoin and more and more money towards cash, we're going to see a lot more things like Tether. Tether buys short term bonds. They make tons of money from holding those short term bonds and giving people access to US dollars. We're going to see Tether's assets under management blow up. We're going to see Bitcoin's total market cap increase past $100 trillion. Now, keep in mind, right now it's only worth 1.7, 1.8 trillion. This is going to 50x, it's going to 100x, it's going to 200x because people are going to realize that this is the portfolio they need. They don't need stocks, real estate, and bonds anymore. All of these are distractions. All of these are trash. All you need is cash and Bitcoin, and you'll get a much higher return. You get less risk because, of course, the cash gives you liquidity. If something happens, let's say you need to repair your roof on your house, that 20% cash will probably cover you for that repair of your house, for that roof repair, depending on how much cash you have, depending on how big your portfolio is, of course. So now that you know that cash and Bitcoin works really well for the majority of people, how do you get from something like this, where you have 35% in stocks, 30% in real estate, and 15% in bonds, to something like this? Or let's say you have just cash, 100% cash, and you have 0% Bitcoin, you have 0% in assets. How do you get from that, so 100% cash, or this weighted portfolio, to 20% cash and 80% Bitcoin? The first thing that I would do is I would lump sum everything that I can all at once. That's what I would personally do. I don't know if that's the right way for you to do it. I would personally do that because I understand how Bitcoin works. I'm perfectly okay with being wrong with my Bitcoin investment for the next 4 years. If I came across a bag with $100,000 of fresh US dollars in it, I would deposit it in my bank account and buy 80% in Bitcoin, put 80% in Bitcoin right away. I don't really care about the fluctuations. But I know that that's not for most people. I know that most people don't want to deal with those fluctuations. So what you could do is dollar cost average out of your stocks, dollar cost average out of your real estate, and dollar cost average out of your bonds. And what that means is slowly sell them over time. So let's say if you have 35% in stocks, sell maybe 10% of it every single week until you get to zero. And every single week, put that 10% into Bitcoin. If you have, let's say, multiple rental properties, sell those properties over time. You don't have to sell them all at once, sell them over time and put that money into Bitcoin. But you'll see that over time, your purchasing power keeps decreasing because stocks, real estate, and bonds are trending to zero in terms of Bitcoin forever. So instead of looking at that cash flow, instead of looking at where Bitcoin could go in the short term, think about the long term. If you have, let's say, 5 rental properties today, those 5 rental properties may be worth 25 Bitcoin today. In 10, 20, or 30 years, they're going to be worth 1 Bitcoin or less. The way that I get over the fear of, let's say, stocks, real estate, and bonds temporarily outperforming Bitcoin is I think about the long term. I think about what's going to happen in 4 years, 8 years, 12 years, 15 years. All of these stocks, real estate, and bonds are going to trend to zero in terms of Bitcoin. They're all going to trend to zero because more stocks can be issued, more real estate can be made, more bonds can be issued. All of these are already highly concentrated. The majority of people who are investing already have these assets. So I think that they've reached their highest prices in terms of Bitcoin. I think over time, in terms of Bitcoin, they're going to continue to bleed and bleed until they trend to zero forever. So what we're going to see is because the majority of people don't have Bitcoin yet, because maybe 99% of people don't have Bitcoin yet, we're going to see those people putting their cash into Bitcoin. We're going to see them moving their wealth from all of these other assets, even diversifying a little bit. If they sell part of their properties and they're part of their stocks and part of their bonds and put it into Bitcoin, that's going to have a massive impact on Bitcoin because Bitcoin is a tiny asset. So to move from, let's say, this portfolio over to this portfolio, I would personally sell all my stocks, real estate, and bonds at once, ASAP. Just get rid of them because over time, they're going to trend to zero. But for the average person, this may not be the right way to do it. So what I would say is sell your stocks over time, sell your real estate over time, sell your bonds over time, and dollar cost average into Bitcoin. Get to the 80% portfolio allocation. If you have $100,000, 80,000 in Bitcoin, 20,000 in cash. If you have $200,000, 160,000 in Bitcoin, 40,000 in cash. You can increase your cash reserve more if you want to. Let's say, for example, if you go with 50% and 50%, like I said before, you still beat your diversified portfolio. You still end up ahead by 5%. 5% is massive when it comes to investing. You're ahead of your diversified portfolio by 5% and you did so much less work, you took so much less risk. You have this cash just sitting there to do whatever you want with. Why wouldn't you want this portfolio? It's better for risk. It requires less work and it takes less time. It takes way less time to come to this portfolio. For stocks, you have to figure out which stocks you want to buy. Real estate, you have to figure out where you want to buy a property. You have to make sure you have insurance. You have to pay for attorneys. You have to pay for appraisals. You have to pay for realtors. You have to pay for all that stuff with real estate. With bonds, you have to make sure that you buy the bond from a government that's reputable. You have to buy the bonds from a company that knows what they're doing, that's not going to go bankrupt. With stocks, you have to find companies that are doing well in their industry. You have to do all of this work to construct the perfect stock, real estate, and bond portfolio. With Bitcoin, there's only one. You just buy Bitcoin, you put it in cold storage, you buy it in an ETF, you put it in multi-sig, do whatever you need to with it, diversify how you want, put some in single sig self custody, and you're good. That's it. You don't have to think about anything else. In this case, your cash is going to give you a negative 1.5% return if you include inflation. Let's say if inflation is negative 5%, you'll still do better. If inflation is negative 10%, you will still do better. If inflation is 10% a year by having 50% of your portfolio in Bitcoin and 50% of your portfolio in cash. So stop getting distracted by all of these assets. Stop getting distracted by financial advisors telling you to buy mutual funds, to buy ETFs, to buy all these REITs, to buy all these random assets that you don't need. All you need is cash and Bitcoin. Everything else is a distraction. Every other cryptocurrency is a distraction. Every other bond is a distraction. Everything else is a distraction. All you need is cash and Bitcoin, and that's it.